It's now the second cut of the year by the Fed. Today's critical decision by the Fed comes as it tries to encourage hiring in the slow job market. And despite cutting rates, well, it was cut by the amount demanded by President Trump. Our business correspondent, Alexis Christoforous, joins me now. All right, what do you make of the interest rate cut, Alexis?
Well, this was widely expected, Kira, this quarter-point cut. And we're also getting the statement from the Federal Reserve. And in that statement, the Fed is saying that while this is not a unanimous decision, they said uncertainty about the economic outlook remains elevated and that downside risk to employment rose in recent months. What this means, in short, is that the Fed is prioritizing the slowdown in the job market over rising prices, because we know from the latest inflation report that inflation now sits at 3%, above the Fed's 2% target. But at the same time, we have a job market that is dramatically cooling off. Remember, the last jobs report this Fed saw was back in August, an unemployment rate of 4.3% when the economy just added 22,000 jobs. They haven't gotten any jobs data from the government since then because of the government shutdown. I do want to note there were two dissenters in this decision. I said a moment ago that this was not a unanimous decision to cut interest rates by a quarter point. Fed Governor Stephen Muir, who was appointed by President Trump just a couple of months ago, had voted for a half-point interest rate cut, so more aggressive. We also have the Fed Governor of Kansas City voting to stand pat on interest rates. So sort of muddies the waters when we think about what the Fed might do at its December interest rate meeting. But at least for today, we got what we expected from the Fed. The market is also rallying on this news, might I add, to all-time highs.
I'm not surprised. So let's talk about the impact. What impact does the ongoing government shutdown play into all of this, especially this decision?
Right. So what it's created is a vacuum for the Federal Reserve in terms of critical information the Fed needs to make monetary policy decisions. We're not sure if we're going to get another inflation report next month. The reason we got the most recent one is because it was tied to the cost of living adjustment for Social Security. So the government sort of made an exception, called workers back to get that inflation report out. But what this decision today means for the average consumer is you're going to see borrowing costs come down ever so slightly. So credit cards, auto loans, home equity loans, those kinds of things. You're going to start to see interest rates on them inch down a little bit. You may also see mortgage rates take another leg lower. They're sitting right now, Kira, at a one-year low of about 6.19% on a 30-year.
Got it. Alexis Christoforous, thank you.